It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And it's your real estate breakfast right around Australia, talking and streaming from Logan in Queensland to the suburb of Carlton in Melbourne. And good morning to wherever you might be across Australia, or of course anywhere across the globe. You might be an expat. We talk a lot about you expats moving back to Australia. It is a Thursday, February the 19th, and it's weird that 2030 is only a few years away. What are we going to be talking about, I wonder, in 2030? Where will we be? Who will we be with? It's an interesting thought because it is starting to loom large. But what was happening back in the 1970s in Australian real estate? Well, in the 1970s, it was the end of the post-war boom. In fact, after strong growth through the 1950s and 60s, Australia's housing boom in the 70s started to cool off. Rising inflation and tighter credit conditions slowed price growth, particularly in Sydney and Melbourne, where affordability pressures were already emerging. If you have a look between 1973 and 75, there was a property slump. The global oil crisis and economic downturn triggered one of Australia's first modern property slowdowns. Interest rates climbed, see, didn't just happen to you. Unemployment rose, and speculative development projects came to a grinding halt. Apartment oversupply in inner city Sydney became a talking point, with some investors caught overexposed. That was back in 1974 with those apartments in Sydney. We're still talking about them today. And then, of course, we had the election of Gough Whitlam in 1972, which did see a stronger federal role in urban planning through the Department of Urban and Regional Development, and funding flowed into infrastructure, sewerage programs and growth corridors, boosting land values in emerging suburban real estate areas. So there is a bit of a flashback to the 1970s, and we're going to have more about this era tomorrow morning. But right now, let's go to South Australia and catch up with Andrea Heading, the CEO of Real Estate Institute of South Australia. Good morning to you, Andrea. Good to have you back on the Real Estate Breakfast. Interesting stuff there, eh, from the 1970s.
Yeah, exactly. When you look at sort of what happened, well, what's that, 50 years ago, 55 years ago, and then what's happening now. So, yeah, definitely, Craig.
Now, Adelaide, we like to talk about this mature market. It has transitioned from a hot growth phase, is that fair to say, into a more stable, higher-priced environment?
Yes, I think so. I think what we're seeing is that we're showing really the hallmarks of a mature housing market now in South Australia, and really the market's grown steadily, and now we've really seen it sort of settled at a higher level.
216 suburbs now record median house prices above the $1 million mark. I know before COVID, hard to imagine we'd be talking about that, with growth broadening beyond traditional prestige pockets into established family and lifestyle corridors. So quite a big change really there.
That's right. Probably what we're seeing now is a market that's grown steadily, and we're seeing it settling at a high level. And really, I mean, for homeowners, we see it sort of being a really positive outcome because it's equity gains are being retained rather than lost in sharp cycles. So we see values are really being supported by genuine demand, not really short-term speculation.
And what is happening around people building new? Because in South Australia, if you look at the numbers through PropTrack, they're suggesting that more established homes are favoured because of build times just being too long. However, if you look at the numbers, they are, in terms of time for new builds, going down.
2021, there was a build time of 8.8, so 8.8 months. And then it rose a lot, and certainly between 21 21, 22 and 22, 23, but that was really just in terms of backlog. So that sort of increased up to 12.9, just over a year at the highest. We've seen it drop back now in South Australia to 10.3. So, whilst it's a couple of months over what it was, say, in the 4 years previously, we're seeing the trend sort of go, downwards rather than being sort of tighter in terms of what build is. But if you think from beginning to end of that period of the 10 months, when really what we're seeing in South Australia is once a house comes on the market, there's really quick clearance rate in terms of times on market. What's listed today really sort of like selling at speed.
What about the length of time that property owners are holding on to their properties in South Australia? I think that in some pockets, people are holding them almost 20 years, which is a long time.
I know, crazy, isn't it, to think of that? I think the average was about 10 years in certain areas, and certainly now we've seen, say, for example, the suburb of Broadview, 18.3 years. And I know that it's a reflection in terms of people ageing in place. It's sort of life staging rather than lifestyle. Certainly a lot's been done in terms of government assistance, really, to keep people at home longer as well. Broadview sort of is a good example of sort of a market that is perhaps demographically skewing older, and certainly that's reflected in terms of home ownership.
Now, we talk about, these 216 suburbs now recording median house prices over the $1 million mark. You were telling me off air that there's a number of suburbs not showing up too much in the news, not being talked about. I think they're almost at 100 suburbs, 99 you were saying.
Yeah, that's correct. So there's 100 suburbs that have reflected no sales. This was in the last quarter as well. Some really tightly held suburbs. There's Thorngate in South Australia, once again, super close to the city. The suburb itself is probably only really 4 or 5 streets long, but very few and far between do houses come on the market in that particular area. 5 minutes from the city, really fantastic villas, really close to really good schools as well. Certainly we've seen sort of some areas where, yes, there's not suburbs that are reflecting a sale at all.
We are talking to Andrea Heading. She is the CEO of the Real Estate Institute of South Australia. When we come back, we'll ask her just what's happening with the Real Estate Institute of SA and the membership and how that is growing. And of course, we better have a look as well at the median house price growth, and there's been a ton of it. We'll do that after this.
Eager to expand your property expertise? Enhance your real estate know-how with us.
Right, let's go to Sydney now and catch up with Tom Gibson from CBRE. There is this assumption that the hotel brand actually owns the site, and that is not the case. So just talk about that fundamental difference between the brand, whether it's the Waldorf Astoria, whether it's one of the other larger brands, and how that transaction takes place.
It's exactly right. So effectively, when you see the hotels on the Gold Coast, Sydney, New York, around the world, and you see a Hilton flag, a Sofitel, a Hyatt, whatever that hotel brand is, 99% of the time that is not owned by that brand. They are effectively a tenant, and the relationship between that and the freehold landlord is what we call a hotel management agreement, whereby the manager, being Hilton or Marriott, will operate the hotel on behalf of the owner. The owner is who I represent. So when we go in and transact on a hotel property, we represent the freehold owner. And that could be an ultra high net worth like Andrew Twiggy Forrest, or it could be a property fund. It could be an owner operator out of Singapore. There's multiple different types of ownerships that we deal with on our client base, but it's only for really strategic, highly strategic assets that a brand you'll see own the real estate, such as a property in Times Square, New York, or downtown London.
Decode the property market with insider knowledge and insights to better navigate your real estate journey.
It is a Real Estate Thursday right around Australia, talking about your property news. We are in SA talking to Andrea. Yeah, and I've got to ask you about the Real Estate Institute of South Australia, which you're the CEO. How's the membership and all of that news going for you?
Hi, Craig. Yes, certainly really solid and strong numbers with members in South Australia. We've got a market share of about 78% of real estate agents. Not the full complement, but certainly the lion's share of the market. We've had sort of 12 months of big changes, probably more in the residential tenancies market as it's happened sort of nationally in terms of tighter controls with landlords and what they can and can't do with their properties. We've advocated really strongly with our government in terms of protecting the rights of landlords and, finding a balance between sort of happy tenants, happy landlords as well. We're coming into an election, so end of March, we'll see what will happen in terms of Labor v Liberal, but it's a really strong Labor market. At the moment, Malinauskas has sort of announced massive land releases. It's looking positive for Labor. At the same time, we're the squeaky wheel that makes sure that we protect the industry.
What about your members for 2026, about what is maybe concerning them? Is anything sort of putting itself ahead of other concerns at the moment through your members in SA? What would that be?
Sure. I know, Craig, I've talked about this too before, but certainly it's the supply demand in terms of listings. We've seen sort of like the market slow as we have for the last 3 or 4 years. But the big thing probably for them, even if it's a slower time, is that we're not having the traditional seasonal sort of peaks and troughs in terms of what the market looks like. It's sort of buoyant, and sales are happening like all year round. The big thing for South Australia that's in national news was also the algae bloom. So, that affected our coastline from regions through the metropolitan area. Happy to say that hasn't affected seaside properties coming onto the market. If anything, it's people still see that lifestyle attraction in terms of buying seaside. Some really incredible prices as well, like Brighton, there was a record set on the Esplanade for over $6.5 million. Port Wollongong as well, a property on the Esplanade there opposite the fantastic sort of Star of Greece shipwreck. That was around 3.2 million. Yes, we're seeing sort of for South Australia, good sales, certainly sort of in those coastal locations.
Yeah, that's a massive number in Brighton. Boy, what a jackpot of a price. And talking of prices, before I let you go, we should have a look at the median house price because there has been plenty of growth. Let us know where that house price and the apartment unit price market is at the moment.
Sure. So we've got a new benchmark for South Australia, or for Metropolitan Adelaide rather, of 925,000. That's for established houses. And then we're looking at apartments, so 675. So certainly big growth with apartments. And when you look at the same time in the previous year for last quarter of 24 versus 25, 600,000 at the end of 24, 675 at the end of 25, and actually more apartments selling. So it's not even like talking about, there's less supply, so that's tightening driving prices up. It was actually higher supply, but also commanding a higher price.
All right, yeah, I remember when we launched the podcast, you could buy an apartment for around $300,000, pretty close to the CBD. How things have changed, Andrea. We'll leave it there. Enjoy your Thursday. Thanks so much for coming back onto the Real Estate Breakfast.
Cheers, thanks, Craig.
Let's explore together the power of real estate.
They're just not all the same, and you would see that in Sydney. You would hear the stories, know the people that shouldn't be doing it, but are.
That's absolutely right. I think the buzzword of what are you going to be when you grow up is currently buyer's agent, because I've been seeing them pop up like mushrooms, and there's quite a few of them that really should not be charging any buyers for the service that they're offering.
It's such a big market. There is so many big deals that are being made. And when people decide, I'm going to become a buyer's agent, let's go to Sydney.
Yeah, buyers sometimes fail to understand when it comes to selecting a buyer's agent. It's not just about them having a social media presence or a schmick website. Those are not the reasons why you should be picking your buyer's agent. You should be picking your buyer's agent on their expertise, as opposed to other agents where they can't do a deal to save themselves and you have to wait till auction.
We connect you to the best real estate information across Australia. The Real Estate Podcast.